Hey traders, Raghee here. Welcome to Charts and Coffee. Good to see everybody. Glad you could be here to caffeinate and dominate. All right, so let's go ahead and, let's just jump into some calendar implications for the remainder of the week. And good morning, good morning. Great to see everybody. Awesome. So it's Wednesday. And if you take a look, if you haven't already, what I like to do and what helps me sort of focus on the hot zones and the high impact volatility events of the day is I'll take a look at Forex Factory. And not because we want to focus on Forex necessarily, but it's a good global calendar. And it's easy to read. And it gives you this column right here that shows you, what the expected impact may be of a particular event. So I'll rely on that quite a bit. And that's helped me make sure that I don't get blindsided by events that are on the calendar that's, really easy to keep up with. I mean, and in the meanwhile, what I'll do, and I haven't done this yet, is I'll turn on the, as my mom calls it, the dumb box. And I will not watch Formula One Drive to Survive, although I'd much rather than put on financial media, but it's helpful. So get that going. There it is. Closed captioning, mute. But that's the way I'll kind of keep up with the day, because things can happen that are not on the calendar. And usually that's where the dumb box, the television, is going to be helpful. All right. Great to see everybody. As always, if you want to take a look at any particular markets, type them on in. A couple of things that are on my radar at the moment, things that I think are going to be worth watching, I've been getting a lot of questions about whether or not there'll be a pullback in crude. And my answer is, I hope so. For sure. What I'd like to see, if the pattern can, and it looks like we're getting it here, is we're trying to take out the lows of the minor high candle, the lows that's left behind. We're trying to take that out. That could absolutely instigate a pullback. And by the way, we've seen this pullback before, and I was looking to buy this kind of pullback before as well. Now, cards on the table, all of them. I'm long crude and I want to stay that way. And if I'm not long, I want to get in again. So any kind of bearishness is going to be an opportunity to get long. I'm rooting for the bears. I hope they get the pullback that they want, because here was another one of those patterns in here. Not a pretty one, but still support we're looking to see get taken out. It's support we're looking to get taken out. Sometimes it doesn't follow through very much. So please keep that in mind. I mean, the high probability trade in an uptrend, which green over green, that's what this is. Consistent green grab candles, that's what this is. The high probability trade that I'll be looking for is the long trade. The possibility that we get that pattern giving us a pullback, I sure hope so, because that's where the long trade will come from. All right. Another market on the radar. Got some questions on this one as well. I think this was in the previous Charts and Coffee, or maybe it was a premium video from yesterday. And it was, am I interested in shorting XLC? And as a piece of the NASDAQ, yes, I am absolutely interested in shorting XLC, more so than say XLY. Likely, and I don't really see much to do with XLK until it gets to the top end of the range. I don't want to short XLY. This looks like it's getting ready, gearing up with the AEMA lighting up with the propulsion. This looks like it's ready to go double green. XLK looks like it's ready to tussle with the previous highs and maybe become overbought. But it's XLC that looks like the most shortable when you look at all that, relatively speaking, because it's the only one that went double red, right? So even though we lost the red on the bottom, doesn't mean that I'm not going to be influenced going forward by that bearishness. I'm absolutely open to that. I think the question in that video was about Facebook. Am I okay shorting Facebook? Oh gosh, yes, absolutely. If you take a look at Facebook, structure precedes strategy. This is good looking structure. This is the kind of structure where on the daily, between where we are once we get to the wave, which is what we're in right now, and moving back down to the 200, which, by the way, same little telltale pattern that I was pointing out in crude, right in there, that ushered this move. So those little patterns are everywhere. And by the way, those patterns are what the Darvis signals are looking for. There's a specific candle count, so they're a little bit more discerning. There's one of those patterns right there. There's one of those patterns right there. There's another one. So I'm not having to babysit and watch those patterns, although that's a really good one too at the 200. But those are exactly what we're looking to take advantage of if you're looking for those very short-term patterns. All right, so crude's on the list. Michael, your dad called the TV the idiot box. Yeah, idiot was like a bad word in our house. So dumb was about as saucy as we could be. But I love it. Yeah, exactly. Cut from the same cloth. I love it. All right, so what do we have here? Kicking off some symbol requests. Johnson & Johnson, sure. So if I'm looking at Johnson & Johnson, we're looking at J&J. Do we like the structure? Oh gosh, yes. However, this right here, in the preceding, say, 6 to 2 weeks before earnings, I'm game. In this case, this would be puts on rips. But now, actually, I'm fine with shorting this. We just need to wait. And what I would do is wait until the open. And obviously, because if we're playing puts, we've got to wait till 9:30 anyways. I would wait until the open. And the way that I have played this in the past is exactly how this will map to what I would look at today. The way that I played this in the past, any kind of rip in a downtrend on earnings, remember that earnings and any kind of rip in a downtrend can instigate a lot more bottom pickers and a lot more chaos to the upside than, say, a pullback in an uptrend. So you really want to fasten your seatbelt because short squeezes and volatility within the context of a downtrend are very different, and they're just much more, violent, volatile, chaotic. So this is still a short. Yeah, I absolutely agree. This is still a short, 100%. And in the group that it's within, XLV, it's a short as well. Now, of course, with Johnson & Johnson moving higher, the number one stock weight-wise in the XLV healthcare ETF, that is going to most undoubtedly drive this market higher. But that might be a really good opportunity to say, you know what, I want to play Johnson & Johnson, but how about all the other stocks and XLV as well? And can I just play XLV where I know Johnson & Johnson is part of this and play the tide and not the boat? Either way, the structure is great, and I think you're good with that short. Just remember that you got to buckle your seatbelt when it comes to short positions. All right, so, these are setups that I think going forward, and we're just, next Monday starts the live trading for the class. That means you have until Monday to check the class out and then join me for the live trading. And I have no doubt that names like XLC, XLV, crude oil, natural gas, and then even the overbought zones that we're testing in the indices are going to be part of live trading. So yeah, we've got live trading coming up. Super, super stoked about that. Hey, Debbie, thoughts on F? Sure. Other than I love my Mustangs, Ford's a good looking uptrend. Ford's a good looking uptrend. I mean, this is double green, and you definitely want to buy the dips 100%. That's where my focus would be. And then double green means that there's more likely support in the wave. So that was your last one right here. But was that double green? Not quite. So now, yeah, dips full on. And I think you bring up a really good point, Debbie. I think that it makes sense to um, remind us when we're looking at our watch list, when I'm building a watch list and I'm thinking about what I could do in this environment of chop, 3 watch lists come to mind: uptrend, downtrend, chop. Separate not just whether you want to buy or short something, but separate then also, if we can, focus on overbought, oversold, sell the rip, buy the dip. And that's what I have found in chop becomes really, really helpful. Yes, the buy watch list and the sell watch list or short watch list is really great to start. And then in chop, take that next level and say, well, if I could look at list to buy, if I could look at list to short and buy the dip, sell the rip, cool, because we want to prioritize trends. But then there also will be those choppy market opportunities. But this name, Debbie, yeah, I would put that on the buy the dip. I think that's great. Good job. Good eye for sure. Okay, next up is XLC. Yeah, 1K, XLC, Facebook. And then what I'll do is jump on over to have this here. No. So what I'll do is I would make sure what served me really well has been focusing on index sector stock. What is the index doing? NAS is in chop, maybe approaching an overbought resistance ceiling. What is the then most bearish sector within the NAS? XLC. And then what's the most bearish stock within the XLC? And that's where names like Facebook, Verizon, well, that's where the IYZ really starts to say, hey, look, you want a real good dumpster fire? Here I am. And then I would also look at, I would put, it is on my list, ATVI. Look at all the double red here. So definitely not anything that we're lacking for clarity on. So yeah, I would keep an eye on XLC and then relatedly IYZ. So I think that corner of the market, if you're gearing up for fatigue in the NAS, yeah, you could fade the ceiling on the NAS, no doubt. But why not go with the sector that if the broader index starts to roll over, you're going to see likely more follow through to the downside? That's the way I would go. So yeah, I like that a lot. Microsoft pushing XLK, no doubt. No doubt. Completely agreed. And that's where, well, let's open up. Look, this is that sector conversation all over again. And I love the questions because these are stocks that are going to lend themselves really well to that index sector stock. So we ask ourselves, is the XLK as strong as Microsoft? Is there anything stronger? Well, yes, CRM. So as much as we might look at Microsoft, Michael, good eye, I would also say, look at CRM. It's got the best structure within the XLK. This is where I would say, again, focusing on my reliance on probabilities, what served me very well throughout my career is find the trends that are already structured, looking even better in some way than all the other stocks. And in this case, also looking better than the sector. So that boat is a great looking boat within the tide. And then, yeah, Microsoft would definitely be of this group. That would definitely be number 2. I agree. So if you're going to buy dips, I will prioritize CRM, and then I'll prioritize Microsoft. Mm, yeah, that's really it. That's really it. So be careful. I would be careful with XLK. When you've got a choppy sector, these boats, specifically CRM and Microsoft, are going to have to work a little bit harder in terms of the tide that is not going out, not coming in, just sort of choppy. They're going to have to work harder. And so why not find something that's already working, firing on all cylinders? And that's where I would say CRM and then Microsoft. Yeah. All right. Thoughts on IWM? Breaking the squeeze. Oh, which direction? Sure. Oh, great question. Direction is always the most important, isn't it? Great question. So what is here in front of us? A lot of chop. And we also know in terms of the high and the low of the range, we're in the middle. We've got a point of control here. And you know, we're pretty much at the halfway point between high and low of the range. Okay. Then the next challenge becomes, for a lot of traders, remembering that the trend that preceded was up. So there's a slightly bullish bias here. I'd rather buy lows in this market than short highs, but the high short is probably going to be valid. But here's where I'll say it's kind of a coin flip, meaning until I'm at this level, this level, this level, which you can see was what we hit right here, right? Till at one of these levels, see how I know it might say, Rob, we're just barely below it. Really? You're going to be that fussy? Yeah, I want to be that fussy. And so that area, that would be the trigger. I'm very specific. I'm very discerning. I'm picky about the triggers. And with that trigger price comes what kind of momentum would accompany a move to that resistance level. Be bullish. So if I'm looking to buy puts in a temporary, what I feel would be temporary bullish market, then wouldn't it make sense to potentially fade that as it's going up into that level? And I don't have that right now. I don't have that scenario. So if I don't have that scenario, that is simply not my pitch. But I am looking for movement lower. But remember that this is resistance. Clearly, this is resistance. This is resistance. Until I'm there, until I'm looking at having that edge at the edge, quite literally, that's the way I've always described trading distribution chop. Find the edge, focus on the edge, wait for it. And that waiting is so ridiculously difficult, right? I mean, the philosopher Tom Petty was right. The waiting is the hardest part. And so keep that in mind. I'm looking for a slight move lower, perhaps, but I mean, it's kind of a coin flip, because then if I want to play devil's advocate with my very own tools, the 8 exponential moving average said, Rog, hold the phone. We're going to move higher a little bit because the 3 crossed the 8. We're north of the VWAPs. So there could be a little bit more push, which I would love, before that short sell is valid. So I'm not looking at, so I guess the bottom line is I'm not looking at this as a momentum breakout. This is chop. This is ready, aim, fire. This is overbought, oversold. That's the language that I would use. That's the language I'll share with us when I'm looking at a chop. That's the language of range-bound choppy markets. All right. Next up is Netflix. Oh gosh, yeah. What would be the daily setup? Bring me a dip. Bring me a dip. 100%. Give me a dip. And if we get that to the 21 or the wave, fantastic. But until that happens, we got to wait. Do I fear random positive news on, Michael, you bring up a good point. I mean, we want to be aware of that possibility. I agree with you. But that's where diluting, and remember we said we could go with XLV in lieu of a single stock. If that is something prominent within your trading plan and a hot zone or an event that you're thinking, I don't want to get caught up in, perfect. You got that in mind as you're building your plan. That's awesome. So experience has taught me that if I'm concerned about a single stock having an event that could just blow the stock out of the water or clearly out of the parameters of my risk, dilute it, still have exposure to it, but by diluting it with the XLV, I can manage that risk. Does that resonate? All right. Okay, and just like that, Charts and Coffee is over. Oh my gosh. So that goes so fast. Thank you as always for all the questions. I'm going to be hopping into the Sector Secrets Mastery Room, and I'm actually looking super forward to Monday. I mean, you'd think that this market being challenging and choppy may not necessarily be fun, but it's going to be great, because if we can handle the kind of markets that we are likely to deal with before, now in the end of the year, there's probably no kind of market that you can't handle. So I'm looking forward to doing that starting next Monday. All right. So again, it gives you time to review the class and then join me for the close, 2 to 4, Monday the 25th. All right. Day before my anniversary. Very cool. All right, gang. Take care. I will see you soon. Be good to each other.